Well, I'll be seeing you guys.
You
I
should be.
can't see anyone either.
Okay, John, neither of them can see me or each other.
Why? Give him a thumbs up. Just give him a thumbs up. We're just going to run 5 minutes late.
Can they see me now?
Yeah.
I can see them. I don't know if they can see me.
Keep asking, is it? Just ask them, just be there.
If you could, guys, can you see me? If you can, give me thumbs up.
Yeah, it's all looks like it's all good.
Good afternoon, ladies and gents. My name is Simon Brown. I'm hosting this third and final webcast with XM Global. Of course, do the MoneywebNOW podcast every morning. I'm joined by two guests. We've got XM Senior Investment Analyst with a CFA, my bad, Marios Hadjikyriakos, and XM Trading Expert, Marcin Nowogórski. Gentlemen, appreciate your time today. Let's kick off. Marios, if I can start with you. What is the role of an analyst in a trading business? You got a CFA, and that, I got to be honest, is a little different to what I usually see from traders. Where does it sort of fit in, I suppose?
Well, thank you very much, Simon. I'd put it this way. Well, the CFA helps with the analysis part, and that's mainly my role. I trade my own money, or rather I invest my own money, is a more accurate way to put it. And for the clients, what's the role of the analyst? Well, we are essentially there to be a tool that helps the client. We're there to inform the client about what's going on in the markets, how markets, how market trends are evolving, and how they could play out in the future. So let's say you've got an upcoming event. We had a Federal Reserve meeting this week. We are going to write a report about that, outlining what the market expects, what's priced in, how the dollar is likely to move from the event, or rather how we think the dollar is likely to move. And we also record videos about that. And of course, we always try to have the market implications in mind, right? Because the economics are great and so on, but what our clients mostly care about is having that balanced view about what's the outlook for the dollar, for example? What are the risks around the dollar? So that's what we are there to do, essentially. It's part analysis, and I would argue part education, because oftentimes you need to explain a concept and outline it for someone before they can really grasp what's going on the ground in the markets.
I like that point around education, because you're writing a report, and it's a proper researched report. It's got ideas, and as someone who's maybe got some experience in the market, this is great, and they can maybe use that in their process. But to the newbie, they're almost watching over your shoulder and saying, so this is what to think about. This is the potential implications. So it serves that two purpose, and that education one is the beginner, and as you get smarter and better, it becomes the sort of the assistant.
Yeah, that's pretty accurate, I guess. Look, for newcomers, we try to keep things as simple as possible. So my personal style of analysis is simpler is better, essentially. And the fewer words you can use to describe something, the better that is as well. So in a nutshell, we try to cater both to experienced traders and to newcomers by presenting complicated themes through a very everyday language sort of lens.
Yeah, I take your point to that. Staying with you for another quick moment, what kind of information are you and I imagine your colleagues providing, and how do the traders make use of it?
Yeah, so my team, our team of investment analysts, we pretty much do everything. So whether you like charts or whether you like economics and fundamentals, we've got you covered. So let's take it from the top. We write a daily comment about market updates, what happened yesterday, what's coming up today in the markets. We also share that with journalists. It catches some mentions in some very reputable news outlets. We also do a lot of event previews, like I just mentioned. So a Federal Reserve meeting is coming up, the European Central Bank. How could the meeting play out? How could the euro react to it? We've got week ahead reports, so what's coming up in the next week, also pretty in-depth sort of analysis about next week's events. And beyond that, we've got, of course, technical analysis, a huge variety of technical analysis. In fact, our biggest offering in terms of volume, at least. We do stock market news when there's earnings about the company, and of course, those ad hoc kind of themes. We've got special reports as well. So US banks are blowing up. What's happening there? Is it likely to continue? That kind of stuff. And as I mentioned earlier, the goal is for them to be easy to read and to equip traders with the everyday knowledge they need to stay up to date, essentially, with market developments. And as we all know, the markets can move very quickly and very violently sometimes, and it's quite difficult to stay on top of the news. And of course, everything I just mentioned, we also do it in video form. Naturally, there's been this progression from people mostly reading, so old school traders still prefer to read most of their analysis, but especially younger generations, ourselves included, video form has become. So we also try to do, every report we do, we try to have short 2 to 6 minute videos, just talking about the specific report and summarizing it, essentially.
Yeah, and I take the point. And it has been, look, markets were always crazy. The last 10 days, 2 weeks, perhaps a little crazy. And we had a public holiday in the middle of it, which didn't help because markets were closed. Well, so let's bring across to you. Traders, are traders analysts themselves? I mean, traders are obviously analyzing markets. How is it different to what Marios is doing?
Well, it of course depends on a trader. On every case is different. Every trader is an individual person, right? But I would say that one common misconception here is that traders should be analysts, and they think it's the same job, right? But actually, it's two jobs. So if you are trying to be trader and the analyst and do it like part time or after regular work, you are getting into a trap. Basically, it's very difficult. Probably it's not very likely that you will be successful in doing that. Just a little bit, but it's still as a profession. So being an analyst is a different profession than being a trader. Of course, some parts are common, but what do you see when you see traders making an analysis like Marios does, for example, macroeconomic analysis? You see the difference, right? Because Marios is a professional in what he's doing, given all the knowledge, tools he has, the time he spends on that. It requires also time to dig in those indicators and correlations, right? You need to understand and know how they are correlated with what you are trading or what you are analyzing. So definitely you should pay respect to what analysts are doing, because it's neither easy nor fast, right? And so as a trader, if you focus on analysis, there is a risk that you will lose focus on things that are really important. So it's position management, it's risk management, right? Like I've seen many traders who are whose heads are full of signals of information from the market, from the world, from everything, and their money management is like, okay, 3% of my balance I'm risking, and that's their risk management, right? I mean that's a big disproportion in what you are suited to do and what you need to do. So you can be analyst as trader, but you need to understand that these are two different jobs. So every person can have two jobs, but you need to treat it like so, right? So I would say that that biggest difference is that if you want to be trader and a little bit of an analyst, you probably should use help of someone who is, let's say, dedicating much more of his time and education to that. And here Marios is a great companion in trading voyage.
I take your point in that. It's why try be both things? Marios can do it for you, and he's probably more skilled than I'll ever be in it. Leave me to what I do, which is my trading component, and in essence work together rather than try and reinvent the wheel.
I mean, so yeah, that's basically what it is, and there is this another I would say myth maybe, that trading is a solo business, right? That you have to be alone as a trader, which I disagree with. I think it's harmful fallacy, and we should deal with it. I mean, there are so many aspects of trading where you are better off with other people, like cooperating with them. Even mentioning psychological support, which is extremely important as well, and of course professional analysis, which is like also something that you could use someone's help.
Yeah, and I agree with you 100% on that. Trading can become very lonely, and I think it's an important component of trading to make sure it isn't just you by yourself. You need that support across a myriad of different processes. Marcin, I want to stay with you. Analyst versus trader sessions that you have in XM Global. Is this around conflicting positions, or is it more a case of perhaps starting on different sides but trying to find a consensus, trying to find something that seems to work and thread the middle line?
Well, yeah, it's not entirely about conflicting positions. I mean, as a trader, you need to be fine with conflicting positions, because essentially what the market is people with conflicting opinions meeting there and making a transaction, right? Like you believe you should sell that asset, but you need someone who believes that he should buy that asset for transaction to be successful, right? So as a trader, you shouldn't feel threatened that someone has different opinion than you have. I mean, it's what fuels the market essentially. But then it's the market is also about consensus. So it's like there are two sides of the same coin, right? Like being different and having different views, but then trying to find some consensus and price that asset properly. That's also what the market is trying to do constantly, but not going into many, not going into digressions or details about the market. Speaking of the session, so it's essentially about using Mario's help, right? At least for me as a trader, right? And try to understand where I could be wrong and what could be less of a subjective approach or view on certain assets, right? Because my view is purely subjective, and being trapped in your own subjectivity is usually not good for trading and for your performance. So trying to understand someone else's views, trying to understand what someone who's professionally digging in the macro data, what he sees or what he thinks, is very important. But also, it's so you mentioned the consensus, right? Because it's about making it work for traders, right? So making so the macro knowledge and fundamental analysis is not easy to apply to for trader and most traders out there. It's actually a struggle. Many say, okay, I don't use macro, I don't use fundamentals because it doesn't work. What they say actually is, I don't know how to make it work for me. So I think that's one of those missions of those sessions, to make it work for traders as well, to help them understand how to make it work.
And it's that sense of, particularly with someone who's new, watching the process and realizing, okay, this is how they fit together, this is how they work. Marios, if I come back to you to a moment, I mean, obviously fundamentals are a big part of your process. Do you use much technicals at all?
I do actually. So, look, technicals versus fundamentals is like a religion in the markets. You are either for one or for the other, and there's no middle ground, and everyone gets really passionate about that, right? I think about it differently. So I think of the fundamentals as allowing me to get the direction of the market. So our stock market is going up or down based on what's happening in the economy, for example. All right, are they going down? Perfect. Technical analysis is going to get me to allow me to decide my entry and exit points. That's how I view it. And there's also a lot of fundamental arguments about why technical analysis works. So let me give you an example. Options, derivatives markets are one of the biggest things that drives actual markets, one of the biggest forces. Well, how do traders decide which options to use? They look at the charts and they look at turning points on charts, and they try to do their risk to reward like that. So honestly, for me, it's not really, do fundamentals or technicals. It's really about how do you blend the two together to get the most out of what you have in front of you. So an analogy I always use here is, why would you ever run a marathon on one leg? Why would you read a book with one eye closed? Why not use all of the resources available to you is the short answer. Now, look, obviously, I'm a fundamentals guy. I love economics. It's my passion. It's my life. But I really don't understand why you should overlook the technicals. It's almost, what perhaps equally important at least in trying to structure a trade.
Marcin, is that for you as well? I mean, what Marios says there is exactly how I sort of played. I will, particularly in my equity trading, I identify the stocks and the fundamentals and how I like the stock, but then I wait for a technical to tell me the when to buy, because otherwise I could be buying a stock that's falling, and it might be the best stock in the world, but it can fall a lot longer. That blend there, is that broadly how you would use it? One identifies maybe the direction and maybe the trend, and then the technicals can help you understand the timing.
Well, exactly. The word timing is the one that I have in my head, and you said it. So yeah, because fundamentals, they can give you some ideas but usually the timing is a little bit more tricky, right? You know that market is pricing some aspects ahead, right? Earlier, some later. You know, it's not very specific about how fundamentals work. So if I'm seeing, okay, if I'm having an idea from fundamentals, and I'm seeing that, okay, technicals do not line up at the moment, I will not fight the market. You know, I will not try to be smarter than the market. But when I have fundamentals and technicals coming together, lining up nicely, then I'm having additional confidence in my trading. And I would say, you know, that there is a lot of controversy and debate about, okay, should you use fundamentals or technicals? But I wouldn't compare those two. Also, what people mean by saying technicals, you know, it's a little bit general, because if you go into details, different persons may mean different things by saying technical analysis. But I would say in general, you know, they don't compare too well. Like they provide you different information. So if you get valuable information from this or that source, and you can use it for your benefit, for your advantage, then it's fine. Like I would totally recommend that, and I'm using both technicals and fundamentals for different scope of information. So yeah, I would say it's like fundamentals plus technicals.
Yeah, yeah. No, I get that. And then to the point you made there, is that there is, you know, there's data out there. Why ignore a whole swath of it and say, I'm not interested in either the chart or the fundamentals? If it's there, I mean, don't run the marathon on one leg if you've got both. I mean, that just makes absolutely no sense.
Well, I would add maybe that there is this one very important point in the overall debate, that technical analysis is not providing you with advantage right now, because everybody can see charts, everybody knows the same technical patterns. But I think it could put you at a disadvantage if you disregard that information that's coming from it. So
at that point,
so just to catch up with everyone else, right?
Yeah, to keep up with everyone else. And I've heard the argument that says we've all got the same chart these days. But what the chart also does is it tells me, to the point you made earlier, you know, for every buyer there needs to be a seller. The chart tells me information about where the buyers are, and where are there more buyers or more sellers. It might be the same information to everyone, but it gives me information that helps me make decisions. So, you know, I've heard the argument that technical analysis is overdone. I disagree. I think I'm with you on that one, absolutely. It helps me understand what the mood of the market is, perhaps, for want of a phrase.
Yeah, well said.
If I can pop in,
yes.
Think about algorithms, right? How are most algorithms structured? They're structured around the technicals. So if a large percentage of all trading is done by algos, and algos mostly follow the technicals, well, you'd be crazy not to pay attention to the technicals, right?
Yeah, no, absolutely. It's absolutely there. Marcin, let's come back to you for a quick moment. XM Live Education, talk to us a bit about the live education offering, what it does, who it's for, and benefits of it.
Well, first of all, you know, it's like, I think it's like the way of learning, and in a practical way, and seeing how trading really is, right? So in that sense, you see many experts, and well, we are called experts, but we are actually traders and market practitioners. We are not educational experts in a sense like you see them in school, you know, giving lectures. So we all trade, and we show how it really is. Like, so it's also that there are different styles presented, right? Like everyone there, as I've seen, you know, taking part in this project for several years already, and you may see watching us, everybody has somewhat different technique of trading, different approach, but you see that the level is professional. I mean, you see that they are very, very dedicated to their method, very specialized. And then you see those other parts that are common for all of us, like this mindset towards trading. It's very similar, and of course high level. So when beginner trader joins us, or even advanced trader joins us, he may see certain things, what we do, how we do it, and how it may look like in real trading, not in commercials, not in marketing. That's internet is full of, and that's very unfortunate what is shown there. But so as advanced trader, you can get inspiration. As beginner trader, you can be looking for your way more effectively, not wasting your time on some missed ideas or missed, let's say, holy grail systems. You can actually see how the trading really is, how traders deal with their positions, sometimes with losses, because it's also part of trading. So in that sense, it's very effective experience, I would say.
And also, I would imagine it's around, as you said, it's seeing different people trade differently and trade different assets. Maybe it's commodities, maybe it's currencies. There's going to be commonalities to them. I mean, one, for an example, is every successful trader's got to have a really good risk management system, but there might be some differences there, and it helps someone looking over the shoulder get a sense of, well, there's different ways I can do it, and maybe I can create my own, take a bit from here and a bit from there, and build my own process over time.
Well, definitely, I don't see any other way but to build your own process, right? So it's trading is not copy paste situation. I mean, you are your own person. I am my own person. I'm individual person. You are individual person. We are different, right? So we need to make my trading work for me, your trading work for you. But of course, you can inspire. You can get inspired. I can provoke your thoughts. I'm also looking for inspiration all the time, and I'm rethinking what I'm doing, what other people are doing. So it's a constant learning experience, being in trading, being in the market, especially when market changes, evolves. You need to adapt to it. So definitely. And then there is this component of everyday operations. When you trade every day or every week or regularly, I mean, you need ideas, you need views, you need other views, to, as I mentioned before, to get out of your subjectivity box, out of your echo chamber. So you need to validate your ideas, you need to test them. So you need other people, you need debate. Actually, that's very healthy, I think.
Yeah,
And that's what you can find at live education.
Yeah, and that's what you were saying earlier. Then the quote was trapped in your own views, and I really like the phrase. I think every trader at some point has been trapped in their own views, and you need to break out. There's no use with that. Marios, if I can come back to you, which instruments are easier to analyze and trade? I mean, we've got currencies, stocks, individuals, cryptos, commodities. I mean, do you find that some are perhaps easier to analyze, maybe some are also easier to trade?
It really depends on your trading style, but in terms of getting started in something, I'd argue that currencies are, obviously it's a complicated question, it depends on everyone's character and so on, risk appetite, how much leverage they're using, their background even, but I'd say that currencies are a little bit more straightforward. So in essence, a currency is ultimately going to follow the path of that country, right? So relative economic performance. And of course, you have other factors, influencing currencies, natural resources, the central bank, the government policy, or even, what's the risk appetite in the markets and so on. So you've got a lot of different factors affecting a currency, but I think that currencies are easier to comprehend, easier to grasp in a sense, right? If something bad happens in a country, chances are that currency is going to go down. But it's a different kind of story if you go into stuff like stocks or crypto, right? It's not just the volatility, obviously, they're way more volatile. But let me give you an example. Let's say, and I love to give this kind of examples. Let's say in early 2020, I told you that the world economy would shut down, that GDP would turn negative, the economies would contract by 5%. And it would basically be a global pandemic where how many millions of people died. Forecast the stock market during that year, right? most people, most people, I imagine, wouldn't be really optimistic on the stock market, but the stock market did just fine, right? And of course, that's because of what the central banks did and what the governments did. The huge response to the pandemic, an overload, a sort of maybe too much of a response, and now we are dealing with the hangover of that in terms of inflation. But the point is, currencies are a little bit simpler and more familiar to a lot of people, right? Because even any regular person has probably done a currency transaction just traveling abroad. So I'd say currencies are a little bit easier to digest. Stocks and crypto, I would argue, should be left to the more seasoned kind of traders, especially crypto, considering the volatility and considering how opaque that market is. Commodities are also maybe a little bit straightforward. I would put them in the same camp as currencies in terms of complexity. But once you enter stocks and so on, then it becomes, how do you value it? Then you have to combine the chart, but you also have the risk that, it goes up or down 10% in a single day. So I think stocks are a little bit, especially individual stocks, are a little bit more difficult to risk manage and to try and predict. And case in point, look at something like Tesla in the aftermath of the pandemic, right? And all of that giant momentum. A lot of times in the stock market, what you see is that once it gets going, it doesn't really stop easily. So I'd say that I would recommend, in a sense, that traders should stick to assets that they are more familiar with. Perhaps start with currencies and work your way up towards something more complex, like equities, for example. And an unrelated thought that just popped up now, but I'd say that I'd recommend to everyone to try and write something down more often. So this really helps me doing analysis on various assets. When I have the story in my head, it's a little bit chaotic and it's a little bit all over the place. But once you start typing and you try to summarize it into concise bullet points, your thoughts come into order much easier. And by the way, our sessions with Marcin also help a lot in that respect, right? So I might have a little bit of a chaotic story in my head, but trying to articulate it for Marcin and our audience, of course, that really helps me understand it a little bit better, put it in order better as well.
But I like your point a lot, because I've often said, we've got a stock here in South Africa, Transaction Capital, profit warning before the market opened. It opens 20% down. If you're short, you're happy. But if you weren't short, you've been seriously hurt. And I say to folks, start with the currencies, start with the majors, because I don't think, even in the worst days, and I'm thinking back to Theresa May and everything last year and all those worries around the budget, even there, the cable, a dollar sterling, a couple of percentage points in a day. I suppose then the trick is particularly as a beginner, careful of how much leverage you put onto it, because that perhaps more than anything is then your risk, less more the leverage to risk than actually the currency. So start slow and start small.
Bingo. I think you hit it right on the head. And if you know that the asset you are trading is something like stocks or worse yet, crypto, and the volatility is so much greater, then use much less leverage. Right? You don't need the leverage, and the leverage is ultimately a double-edged sword. I think that experienced traders can handle some of it, but ultimately, even for the most seasoned trader, a lot of leverage is like poison. I think it ultimately comes back to bite you, even though you might get that high of having some huge wins at the beginning. It's much like, I don't know, call it beginner's luck in a casino. You're gonna get the first ones right, but eventually, that's not going to work long term.
Yeah, I mean, in my stock trading, and I don't trade crypto, I hold it, but in my stock trading, I don't use leverage for just that purpose. And it comes to the point, it's one of those things I've evolved over time, which is, Marcin, what you keep on saying is around almost an evolution of a trader. But Marcin, a last question to you. Some of the crucial tips for a new trader. We've touched on a bunch of them already this afternoon. So have you got more tips out there? You say perhaps even a sort of a recipe, and I'm not talking sort of a black book, holy grail type of thing, but sort of some golden rules that a newbie can use just when they're starting out.
Yeah, of course, and there are probably many of such rules or such tips. I would definitely mention the few, the most, let's say, critical ones. Join us in the live education. I must say that, because actually, not because I'm there, I'm with the team, but also because the guidance. I started trading many years ago when there was the community was very very basic trading community, and I was learning the hard way, through losses, of course, and through try and see what works and what doesn't. Right now, you can actually start well oriented. Okay, so you can see different paths, of course, still, but you can see them from market practitioners. Like I don't see better way of learning markets at the moment. So definitely the project has value to guide people, to save you time and really problems. But also I would say one thing I'm seeing is very common among traders and newer traders, is that they so badly try to predict the market, and they constantly live and trade those predictions. So they are trying to tell what the future will be, and then they try to trade that future. And the even worse is when they do whatever they can to create the system, or to create some way, to find some way to predict the future. But nobody knows the future, and nobody can know the future. So that's basically impossible mission, right? And they use all the energy, all the money, and they fail in trading in the end because they cannot succeed. So predicting the market, I would say, is the probably one of the biggest sins of traders that end up badly in the end. So also it's associated with dying for your views, right?
Yeah.
Like people are more sticking to their views, and they are ready to sacrifice their deposit, but they want to be right so desperately, right? So that's another issue. So stay open-minded, right? Like learning, being open-minded, not putting your views, prioritizing your views over your deposit. I would say that also connects with flexibility, right? So be flexible, and you need a trading strategy, right? But you need a trading strategy that's having this flexibility in it, so that allows for flexibility, that allows for some adaptation to the market. um, that that connects also with those predictions. Like, of course, we don't want to predict the market, but we want to have some ideas for the future, how future may look like, right? So instead of trading what we think is right and what we want to be right, we are looking at some scenarios for the future, and which we could trade with better chances. So it's a somewhat different approach. And then if you can't predict the market and you trade just chances, you have to manage your risk. So managing risk, managing your money becomes mandatory, because if you live with this idea that you can predict the market, that now you found the holy grail that had 5 transactions in profit so far, so it must be holy grail, why would you manage your risk, right? You don't need to manage money because you have the predicting machine. And that's what's killing most traders. So it's sort of this mindset that I can predict the market, and I will be right. I want to be right, and then I don't need money management. That's this combo that kills most of accounts, I think. So be flexible, Don't try to predict the market. Don't try to be right. Hide your ego. Stay open-minded. Manage your risk. I would say those are the tips.
And Marios, I mean, you're a fundamentalist, but a lot of that, I mean, again, it comes back to the old cliche: when facts change. If the FOMC had done 0% last night, for example, or something like that, it is that flexibility, and it's not about predicting the market. Even in what you're doing, it's about understanding what's happening in the market and almost saying probabilities, perhaps more than this is going to happen and I'll stake my entire career or portfolio onto it.
I completely agree. Look, there's multiple schools of thought on this. So you can trade the probabilities. So for example, if the market is pricing in the Fed to raise interest rates with a 50% chance and you think it's closer to an 80% chance, there's a trade to be done there. You're not going to be right every time, but out of 100 trades, you are going to be right most of the time, right? So, but of course, I completely understand the other school of thought, which is what Marcin is saying, which is just go with the facts, just roll with how news is unfolding, and don't try to stick. Don't marry a view. Essentially, it's a view. Be adaptable. And one thing I would add to what Marcin was saying is patience. Patience, for me at least, and of course it's an eternal battle with oneself, but I found that some of my better investments or trades have come when I was just patiently waiting for the market to give me a pitch on a silver platter. So most of the times what you see is, markets are erratic, markets are momentum based, especially with the rise of algorithms. So markets can and usually will go further than what you think. And if you just wait for that, oh my God, I can't believe that is happening, that is a really sort of irrational kind of moment, I found that those are the best entry points, at least in my experience so far. And I'm sure we have many more things to learn, but patience. I would preach patience. You don't have to overtrade. 5 good trades are better probably than 20 mediocre trades.
I like that. And it is about patience, I think, at the core of it. And it's the one skill which I have. It took me a long time to learn it, but I think it's one of the things that helps me in my trading a bunch, is that ability to be patient and to sit tight if need be. We're going to leave it there. We've run out of time. Thanks very much. We've got Marios, XM Senior Investment Analyst with the CFA. Really appreciate your insights and time. Marcin, XM Trading Expert. Appreciate your insights and some experiences from the cold front of trading. Gentlemen, thank you very, very much for your time this afternoon.